In this video, we're going to be covering a topic that I get asked quite a lot. And if I had $1 for every time I get asked this question, I'd be a multi-millionaire. So let's cover it. We're going to be looking at the motor vehicle logbook method and how we can claim a deduction. We're going to cover why you keep a logbook, the duration you need to keep a logbook for, what is private and what is business travel to determine the business or work-related usage percentage. We're going to be looking at the logbook versus the cents per kilometer method to find out what would yield a better result. And finally, we're going to look at adjustments that we might make at the end of a period to reflect the business or the work-related usage percentage. So why would we use the logbook method? Well, the logbook method allows us to claim what we call operating running costs, expenses. These include things like fuel, registration, repairs and maintenance, which includes cleaning, depreciation, which, by the way, is subject to the luxury or the motor vehicle cost limit for 2025 financial year. That cost limit is 69,674, and that's indexed year on year. So watch out in the next financial year to see what that indexation was. It might change, it might not have changed, just depending on the indexation number. So these are the operating costs. We can actually also claim things like interest if we have used a loan to buy the vehicle. Moving on, we're going to be looking at the duration. We need to keep the logbook for 12 consecutive weeks, so about 3 months. What happens though when we buy, say, a new vehicle in June of 2024? What we need to do there is we need to cross over into the new financial 2025 year, and we'll need to keep it in June of 2024, July of the 2025 financial year, and August of the 2025 financial year. That will cover 12 consecutive weeks. Now, bear in mind that those weeks need to be representative of the normal usage for business or for work. So it can't be, for example, a non-representative period where you use that vehicle a lot more than what you normally use it for. Or the flip side is you've used that vehicle for significantly less than what you usually use it for in terms of business or work-related usage. Usually, year on year, if that percentage changes more than 10%, then you need to get a new logbook, right? So just keep that in mind. The logbook is usable for 5 years, including the year that you first used it for. So if you use it for 2024 financial year, then you're going to use it for 2025, 2026, 2027, until the 5-year period is over. Next, we're going to look at, well, what's private and what's business usage. We'll give you an example. So say someone who runs their own business and they do that from home. So their home is a base of operations. If they travel from home to a client's office, then that's considered business usage. If we look at an employee situation, if an employee travels from one work location to another work location, say they have 2 offices and they move from one office site to another office site, then that is considered work-related usage. Looking at the private percentage, again, using the example of a business owner and someone who's an employee, if a business owner who has a base of operations, say they travel from a client location to Luna Park, then that would be private in nature. Unless maybe they're going to meet the client on the roller coaster, but I don't think that will fly with the ATO. So just be mindful of those things. What about if an employee is going to travel from home to work? Well, that would be considered private in nature. All right. Well, what do we need for a logbook? To have a valid logbook, we need the start and the end date of the journey. We also need the start and the end reading of the odometer. We need to determine and clearly identify the purpose of each trip. Was it for a client visit? Was it to go and deposit funds in the bank account, right? Or was it to have a meeting with our accountant, right? So if a client is catching up with us, then that would be work related, especially if they are a business owner. We need to also determine what the kilometers traveled for the business or the private purpose is. So that's just going to be the difference between the starting odometer reading and the closing odometer reading. But we need to clearly identify that on the logbook. Next, we're going to compare kilometers, or using the cents per kilometer method versus the logbook method. All right. So first, we're going to look at the logbook. Say we have total expenses of 20,372. We have a logbook usage percentage, work or business percentage of 82%. That gives us a total deduction of $16,705.04. If we look at the logbook method, the most we can claim is 5,000. In this particular case, we have said the total kilometers is 4,999, just on the mark there. Each kilometer we can claim 88 cents. That gives us a total of $4,399 we can claim. This again is for the 2025 financial year. So you can see here, the difference is quite substantial. It's about almost 4 times more beneficial to use the logbook method when we are using 82% for work-related or business purposes over the cents per kilometer method. Finally, we're going to look at the adjustments. What happens when you have a company or you have a trust? Well, you can be an employee or a shareholder or an associate. That is, you're not an employee, but you might be receiving a distribution or you might be receiving dividends. So if you're an employee, what tends to happen in a company is we claim 100% of the expenses, but then we do an adjustment reimbursing the company, the organization, for the private usage percentage. Okay, and that's recorded as other income. If you are a shareholder, then that private percentage is actually recorded against your loan account. Okay, either your beneficiary loan account. If you are a beneficiary, if you're a shareholder, then it's going to be potentially against a shareholder's loan account. If you're a director and you're not receiving employment income, then it's going to be against a director's loan account. So you can see here how all this comes into play. To have more clarity around this, feel free to reach out to us. We explain this in full to our clients and we let them know what the benefits are in comparing or in using the logbook method versus the cents per kilometer method. Thank you for watching this video. If it was of use to you, please consider subscribing and hitting that notification button. So as soon as we post out a new video, you can be sure that you're going to be notified straight away and you can watch it and apply it to your case as soon as you possibly can so you can benefit from it. Feel free to write a comment in the comment section letting us know what topics you want us to cover, or if there's anything else we need to include in this video, let us know and we can do another video going into even more detail and more depth. Thank you very, very much for watching and we'll see you on the next video. Bye for now.